So I would like to call to order the Workers' Compensation Insurance Committee 2023 meeting. As everybody knows, I'm Senator Bob Hackett, and I'll be chairing this meeting today. First thing, we're going to waive a roll call, and we'll mark everyone's attendance. First thing I'd like to have a motion from legislators to waive the quorum. Yeah, Brian Lamb, can I have a motion? Can I have a second? Second. All in favor, please say yay. Yay. All opposed, no. That passes. Now we need a motion to approve the November 18, 2022 committee meeting minutes. Can I have a motion? Brian Lambkin. Can I have a second? Second. Thank you, sir. We've had a motion and a second. All in favor, please say aye. Aye. All opposed, no. It's passed. So we have a very busy agenda today, so let's get right down to business. We'll start by hearing a presentation on the latest developments in the California workers' compensation insurance market. With us today is Mitch Steiger of the California Labor Federation and Kristen Marsh of the Workers' Compensation Insurance Rating Bureau of California. And of course, we'll hold questions until both are finished. Mitch, please go ahead. Thank you.
Can you hear me? Okay, cool. Will do. Great. Well, thank you very much. We appreciate the opportunity to speak today about these really important issues. I guess I'll start. Mitch Steiger, a legislative advocate with the California Labor Federation. For those who are unfamiliar with California Labor Federation, we are essentially a private nonprofit that represents affiliated union locals in California. We represent about 1,400 affiliated union locals, as well as over 2 million workers that are members of those locals. And through that structure, we do our best to provide a unified voice for both union and non-union workers across the state. And so, obviously, with that being our perspective, workers' compensation is definitely an issue that's near and dear to our hearts. And arguably, this broader issue of how we keep workers safe at work and what we do after injuries happen is maybe more than anything else the reason why there is a labor movement and why it is something that is so important to so many workers. That you don't have to go very far back in the history of this state and this country to find a time when workers were openly seen as expendable. When workers died frequently, workers suffered horrific crippling injuries, and the response was basically step aside, make room for more workers. And through years of organizing and some very bloody struggle, we now have things like a strong labor movement and a strong workers' compensation system here in California. And that's why we focus so much on trying to keep it as strong as possible to make sure that we don't slide back into the way things used to be. Very broadly speaking, I think it's safe to say that for the majority of workers, the California workers' comp system works very well. The vast majority of workers who do file claims in the system do get the medical and indemnity benefits to which they're entitled, and we want to make sure that we protect the aspects of the system that work. But there is a very significant minority of workers for whom the system does not work, and for whom the system can pretty quickly become, no exaggeration to say, a nightmarish experience where it can take the worst pain they've ever suffered in their life and turn it into something that runs their entire life into the ground, that can end with homelessness or a crippling injury that follows them around for the rest of their lives, or losing their families, or death. We see this sort of thing happen all the time. And so most of the time when we work on the workers' comp system, those are the cases that we're focused on. We're focused on those thousands and thousands of workers across the state that are struggling with the system, that do have a really tough time getting the benefits that they're entitled to. And so we're very committed to doing what we can to make sure that the system works better for them. And so I'll group my comments into three main areas. I'll start with kind of a general state of the system, with apologies to the Rating Bureau for stealing the phrase that they use for their annual report, but we'll very quickly go over how the system looks to us as workers. I'll briefly touch on some recent legislation in California that's affected the workers' comp system, and then conclude by going through what we see as the need for reform and some of the key areas within that. So for workers, though we are doing what we can to manage the pandemic and transition out of it and as much as we can get back to normal, COVID really does continue to dominate. We hear this from a lot of workers that it's not uncommon for workers in some industries, such as grocery, to have been infected with COVID 3, 4, 5 times. And the evidence at this point is pretty clear that subsequent infections increase the risk of long COVID, that the outcomes get worse and worse for workers. And so we are still very worried about COVID and where it's going to go in the future. It doesn't appear to be going anywhere. So we want to do what we can to make sure that our workers' comp system accounts for that. There are still very significant difficulties in securing medical care for a lot of workers. I'll get more into this a little bit later, but this is, independent of COVID, by far the biggest complaint that we hear from workers about the system, that whatever the issues are with benefits, whatever the issues are with other areas of the system, it's those workers who need medical care in a timely fashion and struggle to get it that are the ones having the worst outcomes and the ones that we think we should focus on the most. And there's also a rising fear of retaliation. Again, most workers probably don't need to deal with this, but where it does exist, it is very real, and it is not at all uncommon for workers to be fired or have their schedules changed or otherwise face some sort of very significant retaliation simply for the crime of having been injured at work. And so that's another one that we'd really like to focus on. Costs, generally speaking, do continue to decline, and that's the wrong bill number. That is an initiative reform bill that is not the one you want. It's AB 863, a De Leon bill from 2012 that probably pretty familiar to the California workers' comp people in the room. It was a very significant overhaul of the system. Probably the biggest piece of it was an entirely new way of dealing with disputed treatment requests, and it made a lot of other changes to the system that arrested some of the very out-of-control cost increases that we were seeing across our system and turned them back, generally speaking, in the right direction. And while far from perfect, has, we think, overall been a great success and has turned the system into one that overall works better for workers and employers and insurers and everyone else, given that the costs do continue to decrease. But a little bit later, we'll get more into what's generating the savings, and whether or not that's a victory for workers is a little bit more of a mixed bag. So for recent legislation, probably the most significant one of the last few years was SB 1159. That was a joint bill between the Senate Labor Committee and the Assembly Insurance Committee that created a COVID presumption. Early in the days of the pandemic, when we saw just waves of workers getting sick with this and really having a hard time convincing their employers that they got it at work, no one really knew how this thing operated. Everyone was kind of stabbing in the dark, but there were massive denials, even more so than there are now. And so we fought very hard to implement a COVID presumption across the board for workers. We weren't able to get what we were trying for in covering everyone, but it did have a few different pieces that made an extremely significant difference for affected workers. It created a first responder presumption that covered police, fire, and healthcare that we think has worked pretty well. Basically, if you are a worker in one of those injuries and you get COVID, the system presumes that you got it at work unless the employer can demonstrate. I don't remember, I think the evidentiary standard is clear and convincing evidence, but the employer can still, if they have some compelling evidence that it was not the result of work-related exposure, they can escape the presumption. But by doing that, it makes it much easier for the worker to win the benefits that we believe that they're entitled to. So that's the good news. The bad news is it also created an outbreak presumption that we don't think has worked very well at all. It was the result of some, I guess I'll call it, intense negotiations between all stakeholders, and everyone walked away pretty unhappy. But basically what it does is for everyone who isn't covered by the first responder presumption, they're only covered by the outbreak presumption. And the first thing that it does is exempt all workers who are employed by businesses with fewer than 5 employees, which is most businesses in California. So out of the gate, most employers are exempted. And then everyone else, the presumption only applies if there is an outbreak in the worker's workplace. And that's defined as if there are fewer than 100 workers, 4 workers have to test positive within a 14-day period. If there are more than 100 workers, 4% of all the workers at a given work site have to test positive in a 14-day period. And the test has to be a PCR test, which is extremely difficult to find in some places across the state. And there is no disclosure to the workers, so they don't know if their employer is in outbreak status or not. they don't even have a clear right to ask their employer or claims administrator if there is an outbreak happening. So it's all kind of on the honor system and hoping that this information is volunteered by those who know it. And our experience has been that that basically doesn't happen. The only time we've ever heard of anyone benefiting from this presumption was a union that kept very close track of the COVID disclosures from the employer independent of 1159, and they were able to apply that presumption in some cases. But other than that, we haven't heard of any group of workers that have benefited from that presumption. And the bill was set to sunset on 1/1/2023, which brings us to AB 1751, which was an extension of the COVID presumption last year. And the first responder presumption was extended. The original plan was 2 years, but that had to get negotiated down to 1 year. So that, absent any other future action, will expire at the end of this year. And we also made a pretty serious effort at fixing what was wrong with the outbreak presumption, proposed a few different versions of that. Those were all rejected, so the outbreak presumption continues for the rest of this year. I haven't seen any legislation this year that would extend it any further than that, but the deadlines are approaching and passing as we speak, so it's not outside the realm of possibility, but I think it's looking less and less likely that gets extended beyond the end of this year. There was also legislation last year that created a system whereby workers can receive their indemnity benefits on prepaid debit cards. This is an issue that primarily affects unbanked workers, so there are still a very large number of workers who either won't or can't access traditional bank accounts, and so they have to take advantage of a variety of other forms of banking products that are out there to get the money and get the benefits that they're entitled to. And so this bill created a system where they could get prepaid debit cards. We always watch this issue pretty closely because some of these cards can come with some pretty predatory fees, and we've seen some workers lose even double-digit percentages of their income or benefits to these fees, depending on how bad the fee schedules were. But we went neutral on this bill given that the cards themselves actually came with a pretty good fee schedule outlined in statute that we would actually like to see applied to all of the prepaid debit cards, maybe even the ones that are used to pay wages. And so this one sunsets on 1/1/2024. There's also an effort underway to extend this one either a certain number of years or indefinitely. We're waiting for a report from what we call CHESWIC, the Commission on Health and Safety and Workers' Compensation in California, that will basically let us know how well this program is working out. We don't really know yet, so we at the Labor Fed at least are kind of reserving our judgment on an extension until we learn more about whether or not the system is working that well from this report. Probably the biggest bill last year was SB 1127 by Senate Pro Tem Atkins from lovely San Diego. And this bill dealt primarily with presumptions that affect first responders. It was a huge priority for the California professional firefighters, the main union of firefighters here in California, where they had seen a pretty common problem of workers employers who have this 90-day span of time that they can use to accept or deny a claim. The employers would wait until day 88 or 89 and then deny the claim and then start doing everything that they could to fight it. And we heard quietly from some employers and employer groups that it really didn't take that long, that this was kind of a negotiating tactic, and that definitely lines up with what we think, how we think the system works. And so the effort was to lower that from 90 to 60. It ended up going down to 75, which is still a step in the right direction, but we believe it should still be less time, that workers shouldn't have to wait that long for an answer from employer regarding causality. For certain cancer claims, the amount of time by which workers can receive those temporary benefits increased from 2 years to 240 weeks. This is a big deal because with a lot of these cancer claims, it takes longer than that to basically figure out what's going on, to deal with all the disputes around causality and treatment requests, reach that stationary level. And so that's an important reform to make sure that workers can continue getting the indemnity benefits that they're entitled to. And then also increased penalties for unreasonable delays in the system. This is another problem that we see, not just obviously with firefighter claims, but all across the system. There are a wide variety of tactics that some employers or insurers or TPAs can use to really delay things for workers that in the long run cause a lot of harm throughout the system.
Mitch, if we could, just a couple minutes. Thank you.
Okay. AB 5, this is one that is very well known to most of us here in California. This Oh, sorry, does not have to do with first responder presumptions. This one has only to do with employment status, whether employee versus independent contractor. And this codified a state Supreme Court decision called the Dynamex decision that clarified whether or not the test that's used to determine whether or not someone's an employee or an independent contractor. We were very strong supporters of this bill. We think it was one of the biggest victories for workers in California in generations. The explosion of misclassification touches virtually every industry out there, and workers who are misclassified lose access to just about every single protection under the labor code. And this bill was a major step in the right direction in cutting off the access that some employers believed they had to cut costs by misclassifying workers. And I will try to start moving a little faster. Proposition 22, this very much had a workers' comp component to it, where it's not really legislation, but it was a ballot measure to the people that essentially threw out the existing workers' comp system for gig economy workers and created another one with all sorts of different problems and all sorts of different concerns. And given the constitutional nature of our workers' comp system, that has largely been the basis for the struggles that Prop 22 has had in the court system. As it stands right now, it has been thrown out. We'll see where it goes from here. But we were obviously major opponents of this proposition and did not support in any way what it did for those workers in terms of throwing out their workers' comp system, and hope that it stays thrown out by the different levels of courts. And I'll just try to briefly touch on the need for reform. As far as indemnity benefits, the temporary disability process here, we think, tends to work pretty well. The benefits are indexed. They replace a fairly significant portion of lost wages. The permanent disability benefits are a totally different matter. They're capped at $290 a week, which doesn't really even cover rent in most of the state, and we strongly believe that there should be a major increase in that soon. I will try to go through these quickly. The biggest issue for us, I'll really focus on this one, is the need for better medical care for workers. That we see delays and denials and problems all across the system, not just for workers, but for employers and insurers. It makes it hard for everyone to know how much to reserve, how much the system is going to cost in the future. But obviously, we think the biggest issue here is that when workers are getting their care delayed, their care gets worse, their injuries get worse. It makes it harder for them to get back to work, and in many different ways raises costs throughout the system and generates the need for massive reform in the future that I'm sure we're all hoping to avoid. And it looks like I may have run out of time. Okay, I will scroll through the rest here. My email is up there if anyone would like to reach out, and happy to talk more about these issues with anyone who'd like to discuss them. Thank you.
Mitch, thank you. Kristen, you're up.
Thank you. I do have slides, but I can go ahead and just go through them. Oh, there we go. Thank you. My name is Kristen Marsh. I am the Senior Vice President and Chief Legal Officer for the Workers' Compensation Insurance Rating Bureau of California. We are the California Department of Insurance designated statistical agent with respect to workers' compensation insurance. Just to provide a little context, when I'm speaking with groups, to put into context where we kind of fit in, you're familiar with NCCI, who collects data with respect to 35 states. This is the share of workers' comp direct earned premiums based on NAIC data from 2021. So you can see down at the bottom, California, we are actually 19% of the overall. 51% is covered by what is considered the independent bureaus, with NCCI having the 35 states and the 43%. Mitch actually did go through a lot of the legislation pieces. The one thing I was going to mention is with respect to the COVID-19 presumptions. That is something that we have been closely watching, obviously, for impact on costs. As Mitch mentioned, that is extended to January 1, 2024, and as of right now, there's no legislation to extend it. The other bill that Mitch didn't mention was SB 216. So this is in California, roofing contractors are required to have workers' compensation insurance, even if they do not have any employees. The idea being that you can't really do roofing work as a solo endeavor. This was expanded to include some other types of licensed contractors, and then in January 2026, it will expand to all licensed contractors will be required to have workers' comp in the state of California. As Mitch mentioned, SB 1127, he went over the different pieces of it. That was an interesting bill. It did have quite a bit of back and forth, and one of the things that they are hoping to do is to be able to collect some additional data. So the the Division of Workers' Compensation is going to be amending their data collection process in order to collect the date when claims are being denied or accepted so that we can look into the issue that Mitch discussed. And then the last two bills are actually bills that were vetoed. And so in California, we have the first responder presumptions that are in place. And every year we have additional bills that extend it to additional peace officers or firefighters in the state. And you can see here, this particular one got vetoed. It has actually been introduced already again for next year. And then with respect to the post-traumatic stress presumptions, so this was put into place in 2020, and it sunsets in 2025. Last year, there were some bills hoping to expand it to additional firefighter and peace officers that was vetoed. It didn't extend out the sunset date, it just expanded it to some additional people. Bills have been introduced this year already to go ahead and try to expand it to some additional people, and also potentially move it into private employers with respect to nurses in particular. Nurses have been introducing bills for quite a few years, working to introduce a presumption for all different types of injuries, but as of now, they have not been successful. If they were, that would be the first permanent presumption that goes into place that does impact private employers. So some of the things that we are watching in some different areas that we're focused on. So Mitch did mention SB 863, which was a large reform. That happened back in 2012. California has kind of this cycle of reforms every so often. We have a downturn, and then as costs start to rise, we have a new reform package come into place. So what would kind of cause that reform to come to fruition? So as you can see, for the last 30 years, we've had a real steep decline in the number of indemnity claims in the state. But you can see for the last 10, 15 years, that decline has plateaued. Same for SB 863. Those reforms did impact frictional costs and did reduce costs quite a bit in the system, but those also too have plateaued. So we're starting to see kind of hitting that bottom and moving into more of a hard market for workers' comp in the state of California. And what's sort of balanced out and kept that from happening is the increase in wages. So we had something like an 11% wage inflation rate, and because workers' comp is based on your payroll, how much you pay in payroll, that additional wage level was able to sort of offset some of those costs without needing to actually raise the rates in California. But next year, I don't think we're going to see an 11% inflation rate for wages. Doesn't look like that's likely to happen. So at some point, that will start to not cover those additional costs, and I do think we will start to see costs increasing in the system. Would also mention cumulative trauma claims. This is another area that we watch. It is specific to California. It's a California phenomenon. But the percent of cumulative trauma claims of indemnity claims has slowly been increasing. And why this matters is cumulative trauma claims are reported much later in the life cycle. They have a lot of medical care. They are expensive claims. So we do keep an eye on this factor when we're looking at the market in general. Also on our watch list is medical inflation. So medical deflation actually drove a lot of our reductions the past 10 years. The elimination of a lot of, opioids and different things out of the system kept medical costs low. But the past 5 years, those also too, along with frequency, have been starting to creep back up. You also see, like I said, the inflation in the economy. And when will that hit workers' comp and when will that hit medical care in the state? So far, because of the drug formularies and different things that we have in place, costs have been relatively stable, but at some point that inflation will find its way into the medical care system. And then long COVID. This is just something we don't know enough about yet at this point. It is an area that we're starting to study. So you can see we do have a significant number of claims. This is based on California Department of Public Health data in the state with respect to workers' comp claims for COVID, and they are continuing to be a significant amount. And then when you start to look at the shares of treatment for long COVID, so even this is based on our 2020 preliminary data, but even with mild cases, you're seeing 11% of those cases requiring care 4 months after. That goes up to 40% when you have someone in the ICU or someone who had a critical care situation with respect to COVID. So at this point, we just don't know really what we're going to see with long COVID in the future and the impacts that's going to have. The WCRB does a lot of research. It's one of our main focuses, and so these are some of our highlights that we're going to be researching in 2023. We are going to be looking at long COVID. We're partnering with the California Department of Public Health to take a look at the claims and see what we can tease out of the data. We're also partnering with Johns Hopkins on a workplace violence and how that will impact workers' compensation. And then the other one I would mention is the employee tenure and claims frequency study. That's a real interesting one, especially as we start to come out of this kind of COVID recession. We're back to the point now where job losses have been recovered. But when you have such a significant increase in jobs in such a short amount of time, you do see an uptick in claims because we believe, and we're going to study to see if it's true, that employee tenure, an employee who's been in a job for a shorter amount of time, is likely to have more injuries and be injured just because they don't know the job as well. So those are some of the things that we are going to be looking at. We're always happy to answer any questions. All of our research is publicly available on our website, wcrb.com. And please let us know if you would like to hear anything further on any of our research.
Kristen, thank you for that. Mitch, I just have one question, one point. I was a commissioner about almost 20 years ago, and I would ask the question, how many providers in my county, which is just next to Columbus, how many providers did we have that did workers' comp? And people would guess all. And what the answer was? 0. Mm-hmm. And when I talked to their people, and Ohio's improved their system. It's a state-run system. It's working really well. But when you talk back then, there were 3 main reasons. One was paperwork was intense. 2 was they couldn't get a decision made. It took so long to get a decision made. And 3, just actually getting paid took a while before they got paid. We worked really hard on that for the state, and I think Ohio's really got a good system with good cost, et cetera, on that situation like that. But that's just the thing. I understand the issue. If we can improve, I always thought the private insurance companies would work a little quicker than that, but it seems to be that's the problem you have is getting decisions made by the company. Is that it in a nutshell?
Yes. You kind of took the words right out of our mouth in pointing out those as the main issues. One of the first things that I do before I give a presentation like this is I go to the Division of Workers' Compensation website and I look at the IMR reports, the Independent Medical Review reports, the second-level appeals system here. And usually within the first one or within the first 1, 2, or 3, you will see one that, to me, just exemplifies exactly what's wrong with our workers' comp system, where it will be the most recent one I looked at was someone who needed 6 physical therapy visits, and it was denied as not medically necessary because he still had 2 left from his initial 6. And they said, well, let's wait and see how these 2 go and see if you need more. We probably spent $1,000 denying those claims, and 6 physical therapy visits probably cost more than $1,000. But now that worker's going to have to go back through that again, deal with that whole process if those 2 don't work, and it probably won't. And there are just example after example after example. The one I brought up last time I did one of these presentations was someone who needed a heating pad that cost $200, and it was denied. Probably spent $1,000 denying that $200 heating pad. And we hear from doctors over and over again that they don't have to deal with this in group health, and they have enough of these experiences, and they eventually just throw up their hands, and they're like, you know what, I've got enough patients, I'm just not going to deal with the workers' comp system anymore. And that creates all sorts of other problems throughout the system. But it's the hassle, it's the paperwork, it's the second guessing. Even when they're in the employer's medical provider network, it still happens. And it's a major problem that we really need to take a serious look at. And we'll see how Ohio does it, because we've certainly got plenty of room for improvement and are looking for any great ideas that are out there.
Well, and Ohio realizes getting people back to work is still the best thing as quick as possible. Mm-hmm. I'm going to open up for questions. Okay, Senator, go ahead.
For Kristen, you mentioned opioids, and so I'm just curious if you have noticed claims for opioids since the injunctive relief with the federal courts has started to interfere with state medical and pharmacy practice, if you've noticed that recipients are struggling to find acute opioid therapy.
Thanks. We do not necessarily look at whether they're able to get the care. We're simply tracking what care is already provided. So I wouldn't be able to directly respond to your question if there is a difficulty with access to opioid care. If you do look at the data, though, the amount of opioids just being prescribed in the system is dramatically decreased, and you are seeing that replaced, with anti-inflammatories and other types of treatment in its place. And really that came about as part of the SB 863 reforms. We did put in a drug formulary, and I think also at the same time just the general practice of kind of moving away from the significant amount of opioids that were being prescribed.
Yeah, we have time for one more question. The speakers will stay afterward if somebody else has a question. From my own state rep, Tim, you have a question.
Thank you for your time, and thank you for the opportunity to ask a question. Can you tell me the process you use in California for getting your doctors and access and how they're reimbursed? In Ohio, we have it's based off of a Medicare plus 14% rate. And then you talked about your formulary and your preferred drug list. Do you coordinate that through any other agencies, or do you see any opportunity to benefit if you would or could do that?
So we don't, we're not in charge of the formulary. That is the Division of Workers' Compensation. We're just collecting the data associated with it. So I can't really speak to that portion of your question. But yes, it is tied to Medicaid, Medicare in California. Mitch, you might know better than me on that. But yeah, it is tied to that rate, which is what keeps it relatively low and why we have seen that medical deflation.
Thank you. Thank you for your presentation. Next on our agenda is a presentation on the proposed U.S. Department of Labor Worker Classification Rule, which has some really important implications for us as policymakers and our constituents as it deals with whether a worker is an employee or an independent contractor. In your binders on page 67 is a news release from the U.S. Department of Labor that provides a little more background on the rule. That is also on the website and an app along with the text of the proposed rule. With us here today is Michael Latito, co-chair of the Littler Workplace Policy Institute, and we'll hold questions, Michael, until after you're done. It's all yours, sir.
Thank you, Mr. Chairman, and good morning, everybody. The rule's origin from the Department of Labor really started during the Trump administration, where a rule was promulgated. And I think most people would say it was favorable from the standpoint of management in being able to support their position that an individual was an independent contractor based upon the different control and entrepreneurial aspects of the test. That rule was certainly opposed, for example, by organized labor and others as not being correct. When President Biden was elected and Secretary Walsh took over, there was an effort to withdraw the Trump rule. And while it's complicated, and I'd be happy to put you all to sleep to explain it all, a lawsuit was filed by us saying that it was improper to withdraw the rule for different reasons under the Administrative Procedure Act. And a federal district judge agreed with us, and as a result said that the Trump rule was the appropriate rule, which is still in effect, despite the fact that this Department of Labor has tried to withdraw it. So this Department of Labor then issued proposed rules that would reverse the Trump rule and instate a new rule that would make it much easier to find that a worker was an employee. The fact that they did that stayed the appeal of the decision from the district judge until the new rule was finalized. 54,400 comments, 54,400 comments were filed to this proposed rule. Having read them all since I have no life, I can assure you that our comments were absolutely the best. That was a joke, by the way, just to see if anybody was listening, and apparently nobody was. Either that or I've lost my sense of humor. We are waiting for the final rule to be issued, which we thought, according to the regulatory agenda, would be in the April timeframe. Rumors are starting to emerge that that's going to be delayed based upon the complexity of Mr. Walsh leaving as Secretary of Labor, Ms. Sue being the acting secretary, having been nominated to become the secretary. And if you want more on that, I'm happy to do it, but I think I'll get off of it. So the bottom line is the Trump rule is in effect, but a lot of uncertainty because we know that this administration wants to reverse that rule. But that's only part of the story, because the National Labor Relations Board also has a rule. And under the National Labor Relations Act, if an individual is an independent contractor, that person cannot be unionized because that individual is not, quote unquote, an employee. Organized labor obviously does not like that because it diminishes the total number of people that they may get as members. So there has been protracted efforts before the board dealing with this same issue. There's a case called Atlantic Opera, where the board asked for amicus briefs, where tons were filed about a year ago, and we're still waiting for a decision that will set the issue up for the board to define, in their view, how an independent contractor should be determined for purposes of the NLRA. That decision could come down any time now, and it's a foregone conclusion that this board will issue a decision that's going to be very favorable to finding the individual to be an employee. But that's only part of the story, because then you have to get to the states. So Prop 22 was already mentioned by Mitch, and Prop 22, as he said, has been highly contested based upon technical constitutional issues and the process that we have in California with respect to initiatives. Oral argument was held some time ago for the Intermediate Court. They have 90 days to issue a decision. The 90th day, if I can count correctly, which is questionable, is Monday. I was scared to death that they were going to issue a decision this morning, so I'd have to read the decision in order to be able to tell you what it meant. But I was given a bye. So I suspect it'll be issued at 5 o'clock tonight, because my wife and I were planning to go away for the weekend. At least you got that joke, so I'm 1 for 2. That will be an extraordinarily important decision, and whatever the decision is, to either affirm or reverse, that will be appealed to the California Supreme Court. And sometime either later this year or probably early next year, the California Supreme Court will issue a decision. But that's only part of the story, because Illinois is about to drop an AB 5 piece of legislation. Colorado has legislation that doesn't deal with the ABC test, but is going to force the TNCs and the DNC to reveal a lot of information, and there'll be a challenge if that passes with respect to compulsory First Amendment speech. There's an issue in Massachusetts where they attempted to have a Prop 22 type of referendum. That was contested as to whether or not the process was correct, and the Massachusetts Judicial Court found that it was not. So we're waiting for decisions on different cases that are filed in Massachusetts, with the likelihood of another initiative process beginning in 2024, an election year. New York has a situation involving a compromise with the Black Car Fund. There's another one like that in the state of Washington between the state and Teamsters Local 117, where the individuals are still classified as independent contractors, but through various mechanisms, unions receive money, usually as a result of those individuals that are paying the fare for either the delivery or the TNC for the transportation. There are other states that are considering legislation along these lines. So what do we have? We have a bloody mess. Because nobody knows, under the state rules, which vary depending upon wage and hour versus UI versus workers' comp, you don't know the rules with respect to the feds. You don't know the rule from the Department of Labor. You don't know the level of enforcement, which will intensify if Ms. Sue becomes Secretary of Labor. You don't know for sure what the board is going to do and whether that case can even be appealed. Which gets us to, I think, my main point. Yesterday, the Financial Times has an interesting insert, which they did, I think, in recognition I was going to be with you today. The title of it is "Why Employment is a Work in Progress. COVID-19 dismantled outdated practices, but what replaces them remains contested." And that's true. And it's worth reading. We're in a workforce transformation right now like we have never seen in the United States, including when we went from agricultural to industrial. We have approximately 5.9 million people looking for work, and we have approximately 10.9 million open jobs. We have an enormously serious problem with a skill gap. We have companies that are starting, for example, to build some of the factories that were authorized under the federal legislation, and they can't find workers to do the work. I've spoken to the last 3 secretaries of labor about putting together a nationwide plan so that we can create a 21st century workforce. Because if we don't have a 21st century workforce, then the 21st is not going to be the next American century. Which is why I founded the Emma Coalition, named after my granddaughter, because I have no intentions of taking a long dirt nap, with my last thought being that my granddaughters are living in China's century. So we tend to get very distracted by all of this weedy stuff, as opposed to taking a look, in my view, of the broader picture. And that is, how do we recognize that people want to work independently? Because maybe working for the BOSS didn't work out so well, because maybe the BOSS was a double SOB backwards. Maybe we need to find common ground with a compromise so we can have portable benefits that workers can utilize and make contributions to. Maybe we need to standardize some of these tests so that there's certainty for everybody involved, and recognize the possibility of even preemption so that we do have national standards. But most of all, we have to have a national plan. And the person that comes up with a national plan that deals with a number of people that have been disenfranchised is laid out in the great book, Deaths of Despair, which was published a few years ago by 2 notable economists from Princeton. There are too many people that have felt left out. There are too many people that don't have the skills that are necessary, and there are too many people that don't have hope. And that's a shame. So we can talk about independent contractors for as long as you want, and a lot of people will, like 54,400 that filed a comment. But let's not lose sight of the broader issue. There's a lot at stake here for individuals, for the country, for the companies. Thank you, Mr. Chairman.
Thank you. You know, and I agree with you in that Ohio is at a really crossroads right now. We have more jobs we've ever had, and they're going to grow tremendously, not just Intel and Honda and Ford. We're just having tremendous. But I say is we can't blow this. And the second issue is a lot of these companies that are coming, and we've got a lot of companies from California that have come in the last year. Yeah, so one of the things that we really worry about is these companies say, well, if we can't find employees in Ohio, we'll bring other employees. Our housing starts, and it's hard to change that overnight. We have to find places for these people to live in a lot of areas of Ohio. So I agree with what you said. These next 3 years are not only key for this country, they're especially key for Ohio. So I'm going to open it up for questions from the committee.
If I could, Mr. Chairman.
Yes.
Steve Stivers, who I think you know.
Well.
Steve and I, along with the CEOs of 8 other state chambers, will be meeting in a couple of weeks. They issued a report last year that we helped support that talked about what the states are doing in order to develop these plans. And with those states, we're forming a task force that Steve is part of in order to address these issues in a holistic way.
Okay, I have a question. Representative Breen has a question.
Thank you. One of the first things they teach you in law school is never ask a question you don't already know the answer to. I'm going to break that rule in fear of sounding dumb, but can you please explain the difference between whatever it is the Trump rule that was instated here, as far as determining what an independent contractor is, the difference between what is being proposed under the Fair Labor Standards Act and the IRS 20-factor test, from a practical application so we can understand how this is going to be applied?
Well, it would be, on the IRS 20-factor test, be a lot easier if that was the test that everybody followed. Essentially, it comes down to the way you determine control and the way you determine entrepreneurial opportunity. And the rules give you examples of how they will interpret those two standards. And essentially, if it's very easy to make out the fact that there's control by the company over the way the manner of work is being done, and if there is a limited opportunity for that worker to not only make money from that company, but from other companies doing the same or substantially similar work, that will make the determination. The IRS test doesn't look at those factors in the same way. So I appreciate the fact that you've asked a question that you didn't know the answer to, but I spent a lot of time on this stuff. I don't think I know the answer either. So I don't know if that's. I'd be more than happy to talk to you offline. You can call me, whatever, and send you some stuff. But in the interest of time, whatever. It's so weedy. It's like you just want to shoot yourself, and it's just a function of how do you want to interpret it. And I think that in all fairness, we want to say, well, everybody's paying attention to the law. That's a bunch of baloney. People have a preordained vision as to whether or not the individual ought to be A or B, and they're going to come to that conclusion. That's the way it works.
Thank you. Listen, I think that's all the questions. I appreciate it. Last person on the agenda is a presentation on emerging issues in workers' compensation. Today we'll hear from Susan Donegan, Chief Regulatory Officer at the National Council on Compensation Insurance, and we'll hold questions until after Susan is finished. Please go ahead, Susan.
Thank you, Chair. Good afternoon, everyone. 2023 is NCCI's 100th anniversary, and for a century, we have been a licensed rating, advisory, and statistical organization for all things workers' comp. We work with 38 state insurance and labor and work comp commissions and departments, as well as state legislatures. We provide research, education, thought leadership supported by the data that we collect from carriers. We also work with various federal counterparts, Congress, congressional committees, federal agencies, also national trade groups, the insurance trade groups, as well as national organizations like NCOIL, the NAIC, the insurance regulators, SOCA, IAIBC, those are the labor regulators. We also cooperate with the other independent bureaus. California is obviously one of them, and Kirsten's a colleague. Our research and basically education supports what we understand about workplace trends, and we deliver insights so that stakeholders like you are able to make informed decisions. Often folks only have contact with our local NCCI state relations folks, so people are often surprised to know that we have over 900 employees, including 100 actuaries and a couple of hundred data professionals located in our Boca Raton headquarters. We also have folks scattered around the country, more now that remote working is more prevalent. One of the things my regulatory division does is that we track all the work comp legislation that you folks introduce. Every year, depending on how energetic you all are, we consider legislative sessions to start in January. They run through June for the most part, although we recognize that many states have different time and duration of sessions, and actually some states don't even meet every year. So it's not unusual for us to track about 1,000 workers' comp bills over the course of a year, and obviously the vast majority of those bills don't pass. But we watch to see what the topics and activities are for the most prominent ones and look at the trends. And we're interested in what might be the most impactful topics to either a specific jurisdiction or to the work comp system as a whole. And when I say that we're watching the whole landscape, what I'm saying is we're trying to see what an impact would be on the system. Financial consequences, good or bad, changes to the structure of work comp itself. Is the grand bargain still relevant? And what's the possibility of even the elimination of workers' compensation? NCCI doesn't take a position on any legislation or regulatory matter. We do not lobby. Very important that we get that out there. But we do provide data and information to help policymakers understand the nuances of their proposals that are pending in state houses. That usually involves some kind of a cost-impact analysis, if we're able to do it, and also help policyholders understand consequences intended or otherwise. So let me point out a few of what I consider to be the hot topics at this point. And some of this will be a little familiar to you. Kirsten's definitely targeted and tagged a couple of the topics. But that's a California point of view. And I'm going to bring it up about 40,000 feet because I do more than California. And I want to give you a taste of what we're seeing nationally. So single-payer health is one. Independent contractors, gig economy, marijuana legislation, hallucinogens and psychedelics. Related and overlapping can also be issues about PTSD, firefighter and first responder presumptive benefit bills. So there are 10 states that have legislation right now about single-payer health care, or some states call it universal health care. It's the counterpart to Medicare for all at the federal level. And what's important about that for workers' compensation is it going to be included or excluded from a particular possible single-payer program? Some legislatures have put in studies for cost-benefit analyses of what's going on with the ability to pay for such a program. As a former regulator commissioner in a state that attempted this a while ago in Vermont, we understand the question of how you're going to pay for it. Didn't pass then, but we've got 11 states, 10 states that are still trying to chew on that issue. Minnesota, for example, is saying that the medical expense portion is going to be included of workers' comp, but not the liability portion in what they're considering. New Hampshire, workers' comp's not mentioned in their pending bill. Texas, and they've got committee conversations going on that's going to relate to workers' comp and group accident and health. So one of the things I want to remind you through my comments is that when you hear of one state's approach to workers' compensation, keep in mind it's one state's approach. The nuances and differences among the states can be dramatic, depending on many, many factors. socioeconomic, geopolitical, the types of clusters of states around, of jobs around the state. And so when you hear about California, many of the issues are the same, but the details often vary. I'm not going to talk too much more about independent contractors in the gig economy because Michael just said we're in a bloody mess. So we'll sort of leave it at that, and just let me remind you that it's an important issue in workers' comp because job classification is at stake. And risk is identified in workers' compensation in jobs, which then drives premiums. So that's a very important thing to remember, is that a job classification, properly done, then identifies the risk so that the carrier, the employer, and the employee are all in sync with the correct coverage and the premium. Now let's turn to the fun part. So marijuana legalization, and that's both recreational and medical, but let's leave the recreational aside. That's a little bit too much fun today. And I just want to warn everybody that I still understand that marijuana is a Schedule I drug that's still illegal at the federal level. That has not changed under the Controlled Substances Act. But our states, you all got us out ahead of the federal government. So we have 22 states where medical and recreational marijuana is legal, 15 where it's med only, 10 where CBD or non-psychoactives are legal, and then we have 3 states where it's all verboten. So what's the issue for workers' compensation right now? The issue is whether or not, and on the medical side, whether or not medical marijuana is covered by workers' compensation insurance. Should there be reimbursement for the use of medical marijuana? And if you think that the independent contractor and gig economy situation is a hot mess, just take a look at the legislation for marijuana. We've got many different incarnations of this around the country now. Kentucky has a bill pending, I believe in the House, where they're saying medical marijuana is not required to be covered. Same with North Carolina. Massachusetts says they've got a bill that says, oh yes, it does. Because in 2020, the state Supreme Court, the SJC, Supreme Judicial Court, they said in a case that neither the plain language of Massachusetts language or the environment, the regulatory environment, required a carrier to reimburse for that expense. Now you know why it's being debated in the legislature. And same with Maine. They're saying, no, not right now. But we've got a Connecticut review board that says, wait a minute. Perhaps a reasonable and necessary treatment would require that it be covered. So we've got a situation at the federal level, situations at the state level, legislative issues, legal case issues. Somebody's got to start making some decisions here. So while we're on drugs, let's stay on drugs, okay? So hallucinogenics and psychedelic legalization, that's a new one for us this year. We had not been following that very closely because it hadn't really been on the radar. So we now have 11 states that have legislation pending in some form about the legalization of psychoactives. And it ranges everything from simple lawful possession and use of such things like LSD and psilocybin, mescaline. Natural medicine is what it's also called in Colorado. We have simply legalization. Then we have a middle ground where we're seeing states they're allowing there to be usage, supervised usage for medicinal and therapeutic purposes, physical and mental. And then we're seeing some states saying, well, wait a minute, I think we're going to put in some pilot programs so that we can evaluate the use and the results of those types of programs. Utah's the only state I've seen where the word workers' compensation has been put into a bill, and it's not what you think. It mentions that workers' compensation may be a coverage that carriers can issue to a psilocybin production company. So it's to cover the employees that are working in there, in the production. And that happened similarly in Utah in a bill about covering workers who are in marijuana production plants. And so that's the only place I've seen the workers' compensation word. But what's interesting about psychoactives is that in many ways, this is one of the first breakthroughs in some research for things like severe depression and PTSD. And I said there was overlap. So talking about PTSD, what we've seen is we've seen research coming from veterans who have been in supervised use of LSD for things like PTSD and severe depression with some very good results. And I think that people are saying this may be a new way for us to think about those very serious conditions and to help people who are so in need. So stay tuned for that. Turning to firefighter and first responder presumptive bills, there's a lot of activity going around the country right now for that. And for, we've had firefighter presumptions since 1970 in some shape or form in many states. But now it's not only firefighters, but first responders, if you've heard about California, and the expansion of the types of conditions covered. We're knowing more about medicine and about health and about the causes. And so we're seeing that is becoming something that the states are really taking on quite aggressively. I'm going to point you to our website also. We've got a great deal of information there. We have an interactive map of all legislation around the country. All you have to do is hit your state or your next door neighbor's state and you'll see what's pending. We also have a white paper on firefighter and first responder presumption that you could take down that goes into great detail about that topic too. Thank you, Chair.
Thank you. Your presentation was great. Any questions from the committee for Susan? I think we're good. Listen, I appreciate everybody here today. Is there any other business that should be brought before the committee today? Seeing none, before we adjourn, I'll note that next door is the Institute on the Griffith Foundation Legislator Luncheon, which is it's right next door. And we'll be back in this room at 1:30 sharp for the NCOIL NAIC dialogue. So all I need is a motion to adjourn. So moved. Second by Representative Lampkin. All in favor, please say yay. All opposed, nay. We're adjourned. Thanks, everybody, for coming.